The markets are showing signs of life as there is a potential 2 week ceasefire that has hit the news as of yesterday and last night, and that is reflective in the price action in the market today. But there is a category of stocks, and that is software, that I find very concerning at the moment, that is just not getting the bid that all of the other themes in the market are getting to. So that will be the topic of today's discussion. So a quick update on performance: still minus 6.5% versus minus 0.3% for the S&P 500. Just looking to kind of claw and scratch my way back to a break even at least. And once we get over this Iran conflict, looking to fully allocate all the cash and turn this thing around. Email subscriber update currently at 130 out of 100 or 1,000 subscriber goal, which you can click the link in the description to get my daily trading journal updates on any research I send as well. And so getting into it, just really here talking about what happened in the markets today. You can see one day performance of themes pretty much all green everywhere you look. Some themes like packaging up almost 9%. Other themes like networking 5%. You can see compute 6%. Just a monster day rebounding on the news of the ceasefire. But there was a few themes that are red, as you can see. Obviously, oil is going to be down as the Strait slowly but surely starts to reopen and get some ships going through there. So obviously that's going to be down, which is good news. But there's one set of stocks that has nothing to do with this Iran conflict, which is concerning to me because you see everything pumping green except these names over here. And that's going to be software. There's a few sub themes within this theme that are especially not performing. You can see CRM stocks were down 2% today. Some of the names in that theme is names like Adobe, HubSpot, Intuit, Microsoft, which has been beaten up as of recent, especially Salesforce, companies like this. And the AI narrative has been beating up on this specific set of stocks, and that was in February of this year. You can kind of see on the tech stocks started to feel that right there on that few trading sessions, going down from a high of 635 down to about 593 range, and then it started to chop, and then into February is when the start of the Iran conflict began. But it's so concerning with software, especially because you go to a watch list and you just kind of look at the stocks. Well, to touch on it, here's cybersecurity stocks, which isn't exactly the same as the CRM SaaS stocks, but even they weren't exactly holding up either. And that's sidely in part due to the new Claude model that has come out. But to touch more on software and names like Adobe or other names like HubSpot and stuff like that, they're all in stage 4 declines, and they're just getting held down by these moving averages. And then you go look at another theme like space that had this huge, some of these names had these huge green candles today. It's very concerning to see, and it's a thesis that I kind of believe in. I think that as someone who touches these technologies and has built out many things with AI coding tools and things of that nature, it's only getting better. And you can see that with the release today of Project Glasswing, which is Anthropic's newest model that's only available to a few enterprise customers. But basically, it is the most powerful model to date, and they're recognizing how powerful it is and how powerful AI tools have gotten. And they're saying basically we have to come out and partner with companies like AWS, like Broadcom, like CrowdStrike, and partner with these companies to help basically take advantage of their proprietary technology, because they know hackers will be using these AI models. And if you go read kind of into this description of what they're doing with this project, is they want to basically give this technology a full access to find whatever security bugs or anything like that, and it's finding them, right? It's the most powerful model to date. And Anthropic just repeatedly is coming out with more and more new models, new technology, new research, and it's not slowing down anytime soon. And that's why I find it very hard to find a case where I want to hold a software stock. So, for example, you even go look at some of the financials when you're doing some fundamental analysis on a few of these names. And yes, revenue is still growing, but ever since ChatGPT came out, which was the end of 2022, revenue on names like Salesforce were already starting to decelerate, right? You can see 24% to 18%, 11, 8% revenue growth. Obviously, these stocks are huge mega cap companies, and I'm not expecting them to grow revenues by, say, 28% every year. But it's concerning when you flip through these names and you can see the deceleration in revenue growth. It's concerning. It's not what you want to see. You go to Adobe, right? Jumping down from 22% to 11%. And it's going to take a while for these AI models to actually touch these software companies' bottom lines, or even their top lines, rather, since we're talking about revenue. But, it's kind of concerning how these revenues are already decelerating for these companies, and it hasn't even been fully adopted, AI, right? That's what's concerning to me. But one kind of thing I think that these companies have kind of in their back pocket, if they ever want to, they really should start bolstering this effort, is expanding their business segments to include more services. I think they have lock-in from customers who trust them, who use their product, from big enterprises, and they can go and do something like an Intuit, right? That have a tax software, and they're growing revenue. Yes, revenue's decelerating, but in the last few years, it's been slowly upticking. But their revenue segments are kind of broken up like this. They have their consumer software, which is like a TurboTax, and that's 32% of their business. Their bigger segment is the QuickBooks solution and related small business and accounting offerings. So I'm not sure to what extent the related small business and accounting offerings looks like, but I think it'll be important for companies to do more managed services so they can kind of hedge their bets on this AI software death. So that's why I'm not investing in anything software related at the moment. Even if it's cheap, it feels like a lot of these companies are in the phase 6 of the business phase analysis cycle. Like, hopefully they're not asking, can we turn things around soon? But it feels like that might be coming for some of these names. So let me know what you think in the comments. And I read all the comments. If you leave a comment, ask a question, I will get to it in the next video. So see you in the next video.